What's up, guys? It's Brendan from Market Makers. I'm back. I know you missed me, right? So later this week, I'll have my webcam back up and running. I had my 5.5 hour move down here to South Florida. There's some unforeseen water damage at the house. I have to find another place to stay. I think I'll have that sorted out tomorrow, but I wanted to get this video out. It's an important video, retail trap. I want to explain this concept to you guys. Very important to understand in a primary downtrend what the retail trap is. We're going to go over Bitcoin. We're going to go over the equities markets. And then tomorrow, I'm going to have a special video on the recession I'll be releasing. So definitely check that video out. Have some news, my commentary, thoughts on what's happening in the economic space and the assets and the markets that we trade as well. But let's go ahead and jump into this, guys. This video will be brought to you by our two longtime sponsors, BITGET, where we trade all of the cryptos, guys. Check out that platform if you do want to trade cryptos. Link in the video description. Get invited to all the future private tournaments and use that link for our bonus. And of course, SimpleFX, where we trade equities, commodities, Forex, everything else. Link in the video description, as well as the tutorial video, up to $5,000 instant bonus on SimpleFX as well. If you want to trade with us, guys, click that join button underneath this video. It's attached and directly integrated into our Discord via YouTube, and the Telegram for trade signals is in the video description. Let's jump into this, guys. Let's start off on the weekly time frame. Bitcoin has been making progress while I have been busy packing, starting here at the trough up to the peak. 40.41% move. This is a big move up. This is bullish behavior. The equities are on pumps as well, but they look like they are petering out, but we're going to get to that. So what you're doing here is you got above the 200. You're using it as support right now. You got rejected by the 233. You're 45 from your pandemic low. This is strong resistance. You're 45 from your all-time high. Strong resistance. They intersect October 7th, roughly, but that's quite a ways away. That is multiple CPI reports away. That's potentially another rate hike or two away. So let's see how that plays out, but that is something to keep in mind. Let's go ahead and go to the daily time frame or 3-day time frame first. So the 3-day chart, guys, I laid out a wave pattern here. I want you to see the money flow. It is turning into the bearish territory. Your support cloud is beneath you. This is a volume weighted RSI. This is a gift if you do join our room or our Telegram. And looking at this wave, the way it laid out, it's beautiful. Okay, the 618 at 24,023. You have not got these last two candle closes above it. You see that you got a wick above it, got rejected, got a wick above it, reject it, and now you fell down. Trying to use a 382 at 22,757 for support. Price is currently at 23,000 time of this recording. Very important to try to stay above your Wyckoff trading range. Okay, let's go ahead and jump to the daily. I left you last video with that Godzilla move we were talking about that was incoming. Look at the compression. It's done nothing but compress even more since then. And to be clear, guys, we got to talk about two different scenarios here. We can have a move up. We can have a big move up, or we could have an explosive move down as well. This all depends on the equity markets, if they're going to continue to rally, their volume divergent rallies, or if they're starting to top out and will begin to roll down. Remember, these markets are all connected. It's the same whales, the same funds, the same hedge funds, the same big banks, the same large operators. They are all manipulators in all of these markets, and you need to be aware of that. View the markets as a whole. It will help you trade better if you understand that concept. Looking at this compression, guys, of note here, this is the tightest compression in our Caterpillar. I was eyeballing this all the way back to the beginning of the bull run. You have to go back to the beginning of the bull run to find compression this tight. So this is going to be an explosive move up or down. Which way is that bias going to be? If you look at your volume, these gray bars are symbolic of below average volume. You look at your money flow. This is important because you're testing the median line. You see that? You're testing the median line. If money flow crosses below this, it is bearish money flow. You did form a double top here as well, and you are just about to fall through through your support cloud. So if you can bounce off of this, have money flow go positive, you could see a move up to test that 100-day moving average, which is roughly 26.6, the 45 angle above that. The 1618 here is at 31,461. Your 200 and 233 on your daily are moving down towards that, okay? Phi. Now the 200, 233, this is my market top in a bearish primary downtrend. Important concept to note, because remember, in the equities market specifically, Bitcoin hasn't been around that long. The equities market specifically, 47 of the 50 biggest up days happen in bear markets. They are bear market rallies. 1929 to 1930, the stock market saw a 45% rally. The headlines in the newspapers read, "The market's back, hooray, the market's back." And then, of course, a collapse happened in the markets, okay? So we're going to look at this in the equity space as well, but this is how this can turn into a massive retail trap. Be very well aware of what the equities markets are doing, because you could see something like this where Bitcoin rises up and then falls down and collapses like this, okay? Remember, price moves in waves. Market manipulators will always try to milk retail. So you know your resistances are above you, the 1 fib at 27,333, right at that 45 angle. You could see a wave up and then collapse of price. Now, it could also go up. But again, going up, I'm looking at the 1618 at 31,461, and at its peak, the 200, 233, roughly at 33,764. That's if you had this explosive move up. It is possible you are compressing. This could go either way, guys, but we're going to see if we can get more detail, more information, looking at the equities as well. Let's go ahead and bounce over to the 8-hour time frame. 8-hour time frame, you are below the 200 moving average now. Price has been rolling over. Something to pay attention to here is you have printed a massive double top, okay? If price does keep descending, you need to see if you can hold up here at the 0.5 at 22,879. If you lose that, your 618 right here is at 22,458. If you lose that, guys, you're going to be coming down towards that 1 fib, 21,093, close to your neckline. Your neckline is actually the bottom of the Donchian here, about 20,700, right in this range. Okay, so you got to be very well aware of this. Looking at your money flow here, you are bearish. You're getting closer to the oversold territory. So if you can hold the support up here and do yet another wave fashion like this, you are making a series of higher lows and you're making a series of higher highs. You see this? So this is bullish behavior, but understand the macro space as well is very, very important. Looking at Bitcoin on the 4-hour time frame, above the 233, above your Ichi cloud. The clouds are very thin, as you can see. Lots of Kumo twists in here that you can easily fall through, pump through. You've done this over and over again in trend, right? So you got to watch this and see how this plays out. If you do fall through this, be aware your 200's right beneath you. You've bounced off of it, used it as support. Bounced off of it, used it as support. You need to hold that line, which is ascending from where it's at, but it's roughly 21,468. If you lose it, once again, double top neckline is right there. Okay, so let's jump over to the equities markets, guys. I want to show you what's happening here. We'll start off with the Russell. Let's look at the Russell. This tracks the closest to Bitcoin, which is why I track it. That, and I really enjoy trading it. Guys in the Telegram or in the Discord channel can tell you that, because the Russell has a lot of garbage companies, a lot of zombie companies, and it tends to be very, very volatile. Now, you have in the Russell, which you have in all the indexes, is low volume on this rally. You see this rally, this price ascension, you start measuring these moves out, guys, and you see the market cycles repeat over and over again. 15.50% up move. Look at the volume starting from the move. It's the first gray bar, below average volume. None of these bars until you got up to here were even average volume. Now, when you have price ascension or price declination in price, quick movement down in price, what does the volume do? Selling volume, price rises. You want selling volume to accelerate and rise up while price decelerates, and it's the reverse. You have price rising, you want acceleration of movement up of the volume. I think I said that as convoluted as possible, but I think you guys know what I'm talking about. You want volume spikes for selling and volume spikes for buying, whether your price is declining or your price is ascending. There, that's more clear. That's what you guys want to look for. We didn't get that here in the Russell. Volume divergent rally. Volume divergent rallies tend to print distribution boxes, and this could be what you're forming here as well. So we have to watch these markets. The S&P, the broader market, same exact problem. You have money flow coming up to the overbought territory. Look at the volume. I mean, this is extremely low volume. This is what you want to see. Volume rising. Now you have the price going up, and of course volume was going down, and then what happens? You build a distribution top, price collapses. So what we have here is a very nice rise up in the S&P. If you go ahead and grab this from the move, those June lows, 14% even, okay? 14% move, and we have well below average volume, volume divergent rally. These can go on, guys, but you always look at your key resistance levels. Right now getting rejected at the 100-day moving average at 233 is just above you. The 200 is above that. So we'll see if the price can hold up here or if this will start to roll back down, potentially making a shape like a head and shoulders, because you have your left shoulder, your head. You could fall back down in this range, print some candles, and make a right shoulder. So we're going to keep an eye on that. NASDAQ, looking at the NASDAQ, 18.56% up move, big up move. NASDAQ's a big outperformer, but with that outperformance, look at your volume. Your volume is extremely low. Remember, you want volume to rise up, okay? You want volume to rise up to correspond with your price action. You don't have that. When you don't have that, you can build distribution tops, right? So this is what happens, and now we're at the top, near the top of our Ichi, at the Gan fan resistance here as well. So we got to watch and see if this does start to respond and start to roll down back to earth, back to reality. Remember, the markets are connected. We got to pay attention to all of them, guys. Let's look at the stocks 50. Stocks 50, same thing. Well overbought here on the money flow, as you can see. Low volume, big rally up. This is your 100-day moving average right here. And of course, the stocks 50s trying to use it as support. We'll see if it can hold it. I do expect all of these to come back. The stocks may be coming back down to 36.22, the 1618, but we shall see. If people are willing to pay higher prices, the price of the asset will continue to rise. If you don't have velocity behind the move, if you don't have the volume behind the move, the price will continue to roll down. You get velocity with volume. If you don't have it with the volume, your price will collapse, okay? So you'll see this over and over again in these markets, especially in a primary downtrend. So just pay attention, stay frosty, everybody. Check out that special video I'll release tomorrow, and I'll answer your comments and questions, as always, in the YouTube comments section. Have a fantastic evening, everybody.